Well, hey, deal makers, and welcome to the show where it's all about financial freedom with real estate. Let's do this. Today I'm going to talk about the Dealmaker Blueprint, really the proven system to actually how to get your first deal done. And so I'm going to talk to everyone here watching, listening to this, who's convinced that multifamily is the way to go, but you're maybe struggling with one of two issues. One is you may not think that this is something you can do. And the other half of you might be going like, you know what, this is pretty cool. Thank you so much. And you're already on the track to kind of doing this yourself, and that would also be a mistake. Just to recap for everyone here who has not entirely convinced that multifamily is the way, and that's totally fine. I certainly wasn't convinced either that it was the way to go because I flipped 3 dozen houses and I had some rentals. And after reading Rich Dad Poor Dad, I thought that's the way you become financially free. And after banging my head against it, I just couldn't do it. I couldn't scale. I couldn't flip more houses, and it wasn't very passive either. And so I thought for a second to build a rental portfolio, and if I could make each property cash flow maybe $200 per month, I needed to $10,000 per month. That's 50 houses. I was like, oh my gosh! I just spent 3 years flipping 3 dozen houses, which was a boatload of work, and I wanted to stop doing that. It would take me 5 years, and then I would have to manage the whole thing. So I was like, my gosh, what is wrong with this real estate investing thing? Like, what is broken? Why can't I get to financial freedom? And in 2011, I actually got into my first multifamily. It was a 12-unit in Washington, D.C. It was a little bit accident because I got it from one of my wholesalers, one of my flip wholesalers, and that was a nightmare because, again, talking to do-it-yourselfs out there, I wanted to do it myself, and I made a whole bunch of mistakes. I shouldn't have bought in Washington, D.C. I should have gotten the right property manager. I should have run the right due diligence on it, and the whole thing was a disaster. Thankfully, it turned out okay in the end, but man, it got really close where I almost lost the entire building and immediately regretted getting into apartment buildings. And so that wasn't the right way to go about it either. So really I'm talking to people who are saying, hey, multifamily is the way to go. Maybe you don't know how to get started with it. We're going to talk about the Dealmaker Blueprint today. Maybe you don't believe you can do it. Maybe you do believe it's an advanced strategy. Maybe you do believe you need 10 years of investing experience, and maybe you do believe you have to save up enough money to get into the space. That's also incorrect, which we'll talk about here in this podcast episode. And some of you are already looking to get into this, and you're already starting to go about picking a market, analyzing deals, and you don't really have an experienced person looking over your shoulder. That's certainly what I did, and that is also the incorrect approach. I do applaud your action taking. So before we get into the Dealmaker Blueprint here, I'm going to give a shout out to Terrell Stevens, who wrote us a book review on the Yellow Book on Amazon. He says, this book not only inspired me to continue my path to financial freedom by investing in multifamily properties, it actually provided a detailed and clear plan to do so. That's awesome. Thank you so much, Terrell, for that review on the Amazon. If you haven't checked it out before, check us out, Financial Freedom with Real Estate Investing on Amazon. Same name as this podcast, same cover. It's yellow. It's easy to find. And it's a great introduction into syndication, which is exactly what we're going to do here today on the show. All right, so with that, let's get into the Dealmaker Blueprint, because I think what it's going to do for you, for both of those camps, hey, I'm not sure I can do this because I don't know how to do it. And for those who say, hey, I'm ready to do this myself, the cool thing about the Dealmaker Blueprint is that, first of all, it's worked. We've been doing it since 2014. It's worked for hundreds of people do their first deal done. And so we know what works. It's the step-by-step thing of what to do week 1 to 2 to 3, first 30 days, 60, 90 days, etc. We kind of have this dialed in, and I'm going to go over that here right now. And for those who are maybe not sure you can do this, what it's going to do is going to help visualize the process, right? I find that the more you can visualize something, the more likely you are to believe it. Also, for you do-it-yourselfers out there, you may discover that there's a lot to be figured out there, and that your current path of doing this on your own is not going to end well for you. So for both of you, this is going to be a fantastic episode, and let's get right into the Dealmaker Blueprint. So Dealmaker Blueprint has 7 steps, okay? 7 steps from where you are right now, a gleam in your eye, to becoming financially free. 7 steps, and step number 1 is to clarify your vision. And this is very important. I used to poo-poo this whole thing, this whole woo-woo stuff about visualizing and stuff like that, but it's really actually important to clarify your vision from a variety of different standpoints. One from a numerical, logical standpoint, the other one more of an emotional standpoint of what financial freedom really means to you. And so the step number 1 is in clarify your vision, is to come up with your freedom number. What is that number that you really need so that you can quit your job? Now, it's not, when I ask people, what's your freedom number? Oh, it's $20,000 a month. Really? No. What are your minimal expenses that if you actually could cover with real estate income, you would actually quit your job? And that number is far lower than $20,000 a month, right? It's, okay, if I can pay the mortgage and these bills, Okay, I'm not going to my normal vacations, but if I had this thing covered, I would have the courage to leave my W-2 job, my business, whatever the case may be. So what is that number for you, right? And it's not your income, because your income is pre-tax, number one, and you're saving, and then you're going on maybe vacations, whatever the case may be. But what is that minimal number? And this is important because the lower that number is for you, the more highly achievable it is quicker. So what is that number for you? And that's your numerical thing. That's your real estate income that you're shooting for. And then on a more personal, emotional level, really clarify, what is financial freedom really mean to you? It's not a rhetorical question. I want you to actually think about it right now, listening to this podcast, watching this podcast. What does it really mean to you to become financially free? To me, it means time freedom. That means I can do whatever I want, when I want, with whom I want. So for me, financial freedom means time freedom, meaning that I can do what I want, when I want, with whom I want, and I don't have to worry about whether the activity makes money or not. If it makes money, great, but I don't need it. So it really gives me control of my time. And so to me, this was very important after reading Rich Dad, Poor Dad, even though it took me a decade to figure out, finally through apartment buildings, but that really now gives me the flexibility. So our family, for example, we homeschool because it gives us more flexibility. One of the things we love to do more than anything else is to travel. And so in order to travel, of course, you need money, but you also need the flexibility of location. A remote job is very important. And then you might not want to work for a month and actually spend the month on the beach or traveling Asia or whatever the case may be. So to me, having this freedom was almost existential for me. At the time when I had Rich Dad, Poor Dad, I just turned 30. And when I worked a decade, it's not too bad, but I was thinking to myself, man, I need to work another 30 years, 4 times as much as I had already worked, just until I retired, right? And that did not appeal to me. I had my standard 2-3 weeks, and I was like, man, I have bigger ambitions to that. So even though I was only 30, a lot of people don't feel the pain until about 40, 20 years into their career. To me, especially after having read Rich Dad, Poor Dad, really became a sense of urgency for me. And maybe you feel the same way. Maybe you've been, at this real estate thing for a while, maybe for years. You're reading books, going to seminars. Maybe you try to buy a deal, or maybe you bought a deal. You have a rental of some sort, and you're just not getting there, right? So if you're starting to develop a sense of urgency, then this goes into your clarifying your vision. This is a super, super important part of it, because the more real it becomes for you, the more likely you are to stick with it. Because what you're about to do with apartments is with most meaningful things in life, it's going to take a while. It's going to take some investment of your time and your money over longer periods of time. But it's worth it. It's like anything meaningful in life. So therefore, if you have a very strong why, a motivating factor, it's going to carry you through when those times maybe you're not having a great day and you feel like quitting. So step number 1 in the 7-step process is to clarify your vision. Step number 2 is to get connected. And get connected meaning that you have to surround yourself with the right group of people so that you get the right support. And these are all things like clarify your vision, get connected, and the next step I'm going to tell you about are things that I did not do. Certainly in my own investing career, but I didn't really do them at all. Even when I got in the restaurant business, I skipped these steps. And this is why they're really, really important. And the second one is to get connected. And that means you have to look at the people around you for the right support. First part of getting connected is to get your spouse on board. Now, I don't have to be in the business yourself, but they should know what's going on and they should be supportive, because what you're about to do is you are about to change the trajectory of your family, the financial future of your family. And so it's very important to get your spouse on board, because you're going to have to come up with some time, okay? Not a lot of time, 5 to 10 hours a week, but you need some time. So you might need some additional support from your spouse and your family to get this done. And most likely there's going to be an investment. You're going to have to travel, look at these properties, put deposits down, maybe invest in your education. So getting your spouse on board is step number 1 under getting connected. Number 2 is you really want to surround yourself with like-minded people like you, crazy people like you, right? Because if you come home and you tell your friends and family, hey, I'm going to buy myself a multi-million-dollar building, right? And they're going to go, huh, really? Wow, you're crazy, right? And you listen to that often enough, and you start to believe it. And that's bad. You don't want that. Because when you listen to it, you actually start believing that you in fact are crazy when you're not. Therefore, get into an ecosystem with other crazy people. And if you do that, then you recognize that you're not only not crazy, but you're actually being supported by others. This is why I created this tribe called Dealmaker Mastermind, several hundred people of crazy people. When you get into that room, you're like, wow, this is amazing. So make sure you surround yourself in a community of like-minded entrepreneurs. Number three is to find yourself an accountability partner, right? This could be a coach or an advisor, or it could be your spouse, or it could be a good friend. That person, though, really has to hold you accountable, right? So when you say, I'm going to do this thing, I'm going to call 2 brokers, I'm going to do this thing, that accountability partner really needs to hold you accountable, and that's really, really helpful. And the last one is you need someone experienced with you. You need some kind of coach or mentor or advisor, someone who's experienced that can help support you, because how are you knowing if you're doing it right? How do you know if you're analyzing deals right? How do you know you're not overpaying or making a mistake or missing something in due diligence? So you really need to get connected with that senior advisor. Step number 3 of the Dealmaker Blueprint is to get the skills. Okay, you need the skills. Again, something I completely skipped in my investing career, and really what we call in our world that we have like the 4 pillars, right? This is the deal ready pillar that we talked about. This is under the get the skills, and really under the get the skills thing is you want to kind of follow a proven system is a very important part of this thing. You don't want to go and reinvent the wheel like I did. Now in my defense, okay, there wasn't a Dealmaker Blueprint, there wasn't really any blueprint back in the day, but again, I skipped this thing and I didn't become deal ready. I didn't get my education as much as I should, and I certainly didn't get connected like I talked about earlier. I didn't have an experienced person on my team. And so nowadays, in modern days, there are multiple training companies, education companies out there. My advice is to find someone that you resonate with and really go deep with them. But you're looking for a system, a step-by-step system, which this is. You're looking at Dealmaker Blueprint, a step-by-step system, and it gets much more detailed. I'm not going to go into the unbelievable detail of the system because we don't have time. But you're looking for something because the whole idea of buying an apartment building is really overwhelming, right? How do I do this? How do I pick a market? How do I analyze this? How do I raise capital? How, right? So a lot of details, but they're not all important up front, right? So what I'm telling you right now, Dealmaker Blueprint is kind of giving you the overview of what's really important, but it goes, hey, what should you do in week 1? What about week 2, week 3, first 30 days, 60 days, 90 days? And you're looking for that kind of system that has worked over and over again. You don't want to reinvent the wheel. And the upshot of getting the skills part is that you're speaking the right language, number 1. You're speaking the right language, so when you're talking to brokers, you don't sound like a newbie. Also, in getting the skills really is a part of that deal-ready experience is to build a team around you. This is very, very important because if you don't have an investing track record and people ask you, like brokers ask you about your investing track record, you say, well, I don't have an investing track record, and they won't take you seriously. And the way you overcome that is to actually build a team around you. Have a property manager on your team, a lender, an attorney, maybe a CPA, an advisor. We talked about that earlier. And so when you now talk to brokers, okay, and they ask you about your track record, you talk about the property manager that manages 5,000 units in the city. Talk about the lender that originated $1 billion of loans last year, right? And by the time you're done, you're not even talking about yourself anymore. You're talking about your team. And a broker's not going to challenge you because you appear to be a credible, serious person. Otherwise, you would not have surrounded yourself with such an amazing team. And this is how you really break into the apartment investing game without an apartment investing track record, is to actually build your team. So during the get the skills section, you become what I call deal ready, and that is you get some education, you start speaking the right language, and you build a team so that you're ready to do step 4, which is to work the system. And in the working the system is really where the other 3 pillars come in handy, and that's the deal analysis, deal flow, and deal capital. So the system is really about how do you analyze deals, how do you generate deal flow, and how do you start raising capital. And that's really part of the working the system. And so it's very important that you learn how to analyze deals, right? It's very important. Now in our world, we use a syndicated deal analyzer, SDA for short. Very sophisticated modeling, financial modeling tool, but it's very easy. You just enter 7 variables into your forecast and out you get a 10-year pro forma with investor returns. It's pretty cool, right? So in conjunction with your property manager to help you put in the right numbers about rent growth, vacancy, with your lender about your interest rates, loan to value, all those things, you can very quickly answer the question, what's the most I can pay for this deal and why? Right? So working the system means learning how to analyze deals, of course, and analyzing deals. That's working the system. And the other one is talking to brokers. You need their hand in hand, right? So in order to get deal flow, you're going to be working with brokers. That's the 3rd pillar of those 4: deal ready, deal analysis, deal flow. And then the last one is deal capital. Is how do you raise money from private individuals, okay? But not just that. It's also how do you partner with other capital raisers, fund managers, right? How do you do that? And that's how you really raise capital. So you got to make sure that you pay attention to those 4 pillars. That's the most important thing in multifamily investing, is that deal ready stuff I talked about, and then deal analysis, deal flow, and deal capital. And then step 5 is to build your pipeline. So everything up to this point was kind of set up. So set up, you're building your vision, you're getting connected, you're building your support around you, you're getting the skills, becoming deal ready, building your team. And in step 4, you're starting to practice a little bit, maybe in a safe market. We talk about the throwaway market, where you're calling on brokers in a market that maybe you don't actually intend to buy anything in. So if you make a bad first impression, it's not a big deal, okay? So by the time you're done with the first 4 steps, you're basically ready to start building a pipeline, which is step number 5. You're ready now to do real live deals. And the key in step 5 really, and this is important, is consistency, because during this time, you're really doing 2 things. You're analyzing deals and making offers. Every time I say you're analyzing a deal, you're always making at least a 10-minute offer, an informal offer when you're analyzing deals and you're providing feedback for the broker. That's an offer. Okay, it starts informal and gets more formal if you start getting a little bit more into the ballpark of what they're looking for. But you're really just analyzing deals, making offers, and raising capital. Okay, and then networking, of course, in the middle. But you're only doing those 2 things. And so it gets a little maybe boring, tedious. You're doing the same thing over and over and over again. But that's really it. Building a pipeline is, as you get more deal flow, talk to more brokers, you're going to start to build a pipeline of deals. As you speak to more and more investors, you're starting to build a pipeline of potential investors, and you start building up soft commits. So the building a pipeline is really about those 2 things and being consistent with them. Step number 6 is to close the deal. Now, what happened to between the pipeline and closing the deal? And the truth is, while there are a lot of details around how you actually close a deal, right? Your team is actually going to help you with all those things, right? You're gonna have your title company handle this, your attorney handle that, your CPA handles this, your SEC attorney handles that. There's your property manager is going to help you with due diligence, things of that nature. There's a lot of steps in there, but again, you're going to lean on your team as you go through this process. And I think the biggest takeaway from all this, I'll talk about in a second, is this who, not how mentality. Right? You might have a lot of how questions right now. How do I do this? How do I do that? But you're asking the wrong question. Those are the questions I used to ask in the single family house days, but now I'm asking who questions. And the reason I'm glossing over some of these things about closing a deal is that there's a lot of who's, professionals, who will help you figure out these details. The point of this, though, because we're going right from building a pipeline to step 6, closing a deal, is because of that, because of the team of professionals, but also because if you are consistent with deal flow and deal capital, your first deal will become inevitable. It's just a matter of time. It's just a matter of time. This is why in our world, if you follow the Dealmaker Blueprint, your success rate will be 100% if you continue working the system. That's it, right? So close to number 6, you close your deal, and step number 7 is again is achieving financial freedom. And there's nothing really to it, because you only may need that one deal to become financially free, or because of the law of the first deal, you'll have that second under contract by the time you close the first one. Either way, you need one deal, maybe 2 deals. You might want to wait till the 3rd deal, but a lot of people quit their job after the first deal. And that's really 2 reasons for that. Number 1 is they start getting confidence and they see a pipeline forming. And number 2, though, is that acquisition fee. We talked about that before, right? 3% of the purchase price is the acquisition fee. Now, for example, our students, people who work with us, because they want to scale faster, avoid the bigger mistakes, the average deal size is $4 million. It's wild. And they have it under contract roughly in about 6 months. Now, they don't come working with us thinking, oh, I'm going to do a $4 million deal. They're like, I can maybe wrap my head around maybe $1 million. And the reason they go to $4 million is because they're following the system I've talked about here, the 4 pillars. They're surrounding themselves with the right support, they're getting in the right network, and all these things. And they're also working with mentors. These are full-time syndicators who then collectively allow them to do these larger deals. But my point is, this acquisition fee on a $4 million deal is significant. 3% of $4 million is $120,000. Now, likely when you're doing a deal like that, you're going to have a partner. Okay, so there's going to be 2 of you splitting $120,000. Let's say your freedom number is $10,000 per month. You now have a 6-month runway. You might have another $60,000 in savings. Now you have a 1-year runway. This is why so many people are able to quit their job after the first deal, right? And so that's really it. That's the Dealmaker Blueprint. And again, there's a lot of details that you might have questions around, a lot of how questions. But I encourage you to start asking the who questions. Who can help me do this thing? Who can help me figure this thing out? Who can help bring me something I don't have? Experience, track record, ability to analyze deals, ability to talk to brokers, ability to bring capital in, whatever the case may be. Who can I put on my team? It's a huge departure over asking a lot of how questions, because at the end of the day, it's going to take you a long time to really answer all of those how questions. So if I'm talking to you right now, and I'm really encouraging you to kind of start building your team right now, not only these online communities, but we would love to be the first member of your team as well. And if you're interested in finding out more, we'd love for you to work with us and explore working with us, what it's like to actually work with an experienced advisor or mentor and team of mentors that basically helps you resolve all these how questions. And we can do that very quickly. We don't need years to teach you the business of multifamily investing. This can be done in a week or two, and then the rest of the time is you working system, building a pipeline, and closing the deal. So if that's interesting to you, then check us out. We're at themichaelblank.com/call. It's a 20-minute no obligation call, and just it's really, in my mind, the most important step you can make right now in your journey. And don't really try to do this on your own. I have done this, and I wasted a long time and lost money and time, and the deal that I did was much too small. So if you want to actually accelerate the process, we'll become financially free in little as a year, maybe even more, and you want to do bigger deals faster, then let's have that conversation. So check us out at themichaelblank.com/call, and I'd love to have a conversation with you. All right, that's all I have for today. I hope you enjoyed the show, and I hope more importantly that you begin your journey to financial freedom right now. Make that choice to make that step and get into apartment buildings. I'd love to have a conversation with you. So here's to financial freedom. Catch you next time.